Welcome traders, and in this video we're going to be looking at some of the classic charting patterns. So in this video we're going to be looking at charting patterns and how traders can spot these and recognize these patterns in their charts to obviously create more opportunities when it comes to identifying trading setups. But we do need to understand that we can't use these patterns purely based on their own. It's about how you combine all of the tools and the analysis and the fundamental analysis in order to actually find the setups. But these patterns can help with finding more accelerated opportunities. So I've picked a couple of the classic patterns which we've used many times on our analysis on TradingView, and a lot of times that I've used in my trading career. So we're going to pick some of the more classic patterns that are quite explosive and generate a lot of pips in terms of when you get it right, it can provide a lot of momentum in terms of making a lot of pips in a short period of time. And then obviously where to get in and involved, entry points, exit points. So the charting patterns can help a lot with that when it comes to identifying those levels as well. So the first pattern that we're going to be looking at is in fact the rising and falling wedge. Now here, I've already analysed the chart here. I've kind of got my head around this bit here. So this is a falling wedge. A falling wedge just because of the way it looks. Obviously it's a wedge pattern here. And what we need to do is we need to use two trend lines, and then effectively mark out the supportive areas, line of best fit, also a line of best fit on the resistance coming down here. And we can see that it has actually squashed the price action together. Now these charting patterns will tend to squash the price action together, and it will coil it up like a spring. And obviously it's going to spring out and fire, basically explode one way or the other. In most cases on the on this type of pattern, on the falling wedge, we are going to see explosive movements to the downside. Now that isn't the candle wick, there we go. So basically what I've done is, if I actually copy and paste this line here, this is the height of the actual base, and that's where you want to be adding it onto the breakout, and then that's actually going to give you a target. So upon a breakout, a clear breakout, probably this candle here. So we've had a bit of a breakout, you could probably enter there or retest and then continuation, enter maybe here. We can then trade it down towards our target, which we did in fact come down to quite precisely. So you can see here that this would have been a pretty decent opportunity to get involved in, and it did in fact run quite smoothly all the way down. We didn't really get manipulated, and the moving averages were also in alignment with this trade here, and we did in fact all come all the way down to that target base level, which is good to see. And when these patterns do this, it's a great way to just get in and out of the market without too much mess. But obviously we do need to understand the manipulation that goes in along with using all of these tools, because essentially all the traders are going to be wanting to use these tools as well. So it's about how we allocate them onto our chart and then identify where the momentum's coming into play. But obviously there was a lot of momentum to the downside here, and we just kept on breaking down and down all the way to the target. So it's good to see in that scenario. Now here I've just spotted this piece of analysis here. Now this, even though it's slightly more of a pendant formation because of the base here that it's formed, but it is technically it's still a piece of a wedge pattern. So here we've got the base. So if I actually just mark in this height here and then add that on to the breakout, again, the fact that we're actually creating a series of higher lows, the breakout, retest, and then continuation. If I was to actually plot on where the leg went to, the market was super precise in terms of the breakout, the top barrier of here. I did in fact rally it all the way up into that target zone area there. So again, this, as well as trading it downwards in downtrend, it does also work in an uptrend when you do spot these opportunities. So the next charting pattern, we can look at horizontal or rectangle zones. And basically we can use this as, well, when the market does make these sort of zones, basically a period of consolidation within a trend. Now this trend is up, printed by the higher highs, higher lows. I bet we basically consolidated for a little while where, you know, the trade momentum slows down, and then the volume builds and builds and builds. A lot of traders getting short, a lot of traders getting long, because they want to, you know, either take advantage of the next movement higher or the next movement lower. So that's where we can use sort of like horizontal rectangle tools. Now here we have experienced a bit of manipulation at the highs and the lows, where the price has sort of gone to break out, but hasn't done so. But we can see here the fact that, you know, when we did break above with momentum and we carried far and high above and closed well above this sort of zone here, we did in fact continue to the upside. Now again, with these areas of periods of consolidation, we can look to basically add that on to the breakout, and perhaps even looking above all of this here. You would be able to sort of see that we would be coming up into the highs here, and potentially even higher as well. But you know, it's nice to see these sort of zones, these rectangle periods of consolidation, when they do build, that they do, you know, either go in line with the trend, so they carry on with the uptrend. So you know, we can see that potentially you would be able to find a decent opportunity going upon the breakout, retest, continuation, and you would be able to spot these trend patterns, trend based off. Okay, so next we move on to the head and shoulders pattern, where we're going to be looking at how to identify these head and shoulders and what makes them head and shoulders patterns in the first place. Now, head and shoulders pattern is basically a trend change reversal. Okay, so here we can see uptrend, higher highs, higher lows, higher highs, higher lows, higher highs. We then actually turned it into a downtrend, lower lows, lower highs, lower lows. So we can spot this with the head and shoulders pattern. These are your shoulders and this is your head. Usually the right shoulder in most scenarios tends to be a little bit lower than the left peak, or the left shoulder, which we can see in this case. And then we also have a neckline, which is formed based off the support. You could actually use this as a neckline as well. The neckline does tend to be in a bit of a decline in most cases as well, and that when you do see that, it tends to be more probable, a probable opportunity. And then the most important part is actually measuring either from the right peak or the head down to the neckline, add that onto the extension, and then we get our overall target and destination. And we can see here that we did in fact fulfill that target and destination to the downside when we did in fact break and close below. We got a sufficient amount of closure here, and then we did in fact rally all the way down. We did come back up, retested again, and then finally come back down. But we did in fact, I think if you was to measure from the right peak down to the neckline, you would have probably made some quick profit there. Yeah, trading it down to here, and we can see the price did stall around that level, but usually you want to be measuring from the head, add that onto the bottom of the neckline breakout, and then that will give you your overall target. As we can see here, we did in fact fulfill that. So these patterns, again, if you can actually recognize them, are quite a profitable pattern. And again, you can use these in so reversals. So the reversal, the upside down head and shoulders pattern, where we're actually going to be looking to make trade opportunities from downtrends to uptrends. Basically, you want to be looking at the opposite way to how we've drawn it here. But these are, you know, some of the classic patterns that we've traded in the past. Some of the ones that have been most profitable, ones that have been most explosive in terms of looking for quick amounts of pips, in terms of, you know, daily movements, weekly movements. But you know, we also need to stay on our toes and understand when momentum is kicking in and when these are too obvious to actually trade. But that's it for this video looking at the classic patterns. I am going to be bringing some more videos in the future looking at more patterns, because obviously we haven't covered all the patterns in this video, just the main ones that we've used a lot of times before. But I hope you've enjoyed this video, and stay tuned for more blogs to come. Trade safe.